Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, June 26, 2023. It is 10:55 a.m. Eastern Time as I'm starting the video. I'll do the usual, cover the equity markets. I want to talk on Apple real quick because that's very much correlated with it. Threw that out as a potential trade setup the other day, and then quick updates on the other trades I've been focused on lately. Really, and that's wheat, natural gas, crude oil. Which obviously play into the whole inflation trade thing, and then Treasury bonds. It sounds like a lot, won't be a long video. Starting out with wheat only because this is timely. I've been talking about it for the last week or so. We hit T2, and I got an update out today. We're consolidating around T2. Personally, I just turned around and reversed that trade for just a quick pullback. I'll show you why here in a second. But I still favor very much, this is the what I call trend targets. These are trend trade is a longer term swing trade, trades that are last measured in usually months instead of just days or weeks like a typical swing trade. So when I first got it out to you, it was on the 60-minute charts, and it kind of morphed. I gave you these targets after we were in it. So that's it. We're still there. We're still around T2, so no change there, and a hair above it. But that's pretty good resistance. You look at the 60-minute chart, and remember, that's added this 10 days ago back on the 16th. I extended. I initially had 3 targets here. And then that was the 4th and final target. So it's not as clear here. Remember that wheat, W-E-A-T, this ETN, which I am acutely aware the majority of listen to my voice don't trade futures. Some do. But these commodity ETNs and even ETFs, what they're doing is they're not going out and buying bushels of wheat. They're buying wheat futures. So futures are the real thing. And the wheat futures, they don't trade 9:30 to 4 p.m. like this ETN. They have their own quirky trading hours. They trade up to, I think it's like 2 p.m. or whatever Eastern time. They shut down. They're trading over the night. So they have very different trading hours, and that's why you see a lot of gaps in this ETN almost every day, because again, market shuts down at 4. This ETN stops trading, but then and wheat has already stopped trading for the day about 2 hours before that, but then it picks up again in the night. So that's the pure thing. In other words, what I'm saying, if you're going to trade an ETN that is based off a futures contract, you really want to keep an eye and chart that futures contract. There's plenty of free, even if you have like a TD Ameritrade account, and they give you free futures, real-time quotes. You can get them from investing.com and other places like that. I think TradingView even has them, if I'm not mistaken. Okay, so I wanted to start the update out here and just tell you why that, we're still there for all intents and purposes. We're still consolidating, working off those overbought conditions. My T2 level, you can see, is 726. Right now, we're at 727. So this is what, it's the stronger the two when you have a reaction, which is why I list multiple targets. The odds on the initial tag of that target for a reaction are high. I define a reaction as either a consolidation or a reversal from the previous trend, which would be a pullback. And we could still get that. Again, we're very overbought, and that's healthy action to really see it hanging in there. But I think we're probably going to get a little bit of a pullback. I told you this morning when I fired that off, maybe equal odds. But again, if you're an active trader, if you're a long-term trader, swing trend trader, I think there's a good chance those targets get hit. But like anything else, you want to raise your stops. And where you raise them depends on your average cost. Let me show you the futures real quick, and we'll move on. Okay, this is why I started out here. We've now already broken down. We were just starting to break down earlier, just on the line, and this looks imminent. This is a beautiful little bearish rising wedge, very well-defined trend line. And see, you don't see that on wheat because these are trades. A lot of these trades occurred when wheat, the ETN, wasn't trading. So you can see a very clean up trend line, little wedge, 60-minute chart. There's a big old gap right here. These futures do shut down. They don't trade the same as index equity futures, these various commodities. So, pullback target, I think of, back gap fill somewhere in there. If you go back to the wheat chart and you look at, say, the 60-minute chart, T3 it looks like good support. So not much. We're talking, a pullback of maybe 4, but it could be more percent. When you look down here, the maximum would be, I really would want to see any more than this to really make a good case that we're going up here. It would be a pullback all the way to T1. That was a basing pattern. We had a breakout there and started to run. And again, it's good resistance there. So probably halfway point. Anyway, just wanted to share that, and or you take the measured target of the wedge that I just showed you on that 60-minute chart, the widest part of the wedge, add that to where it breaks down, that gives your measured target. All right, let's move on. So that is, again, talking about two things, both the trade idea, way to diversify, asset allocation, diversification, all that good stuff, but also the inflation trade that I've been, or what I call the reinflation trade. Just when the Fed, of course, the Fed hasn't come out and done that whole, the war is over, we won. The Fed's being cautious in rhetoric, but of course, not in action. They paused. So again, that's what the Fed's biggest, tools are at this point in time is jawboning and trying to, really, jawbone the market up or down, or tame the inflation trade. That is by remaining hawkish in rhetoric, but not in action. At least not on their last meeting. But UNG, natural gas, again, another similar chart on the daily with this, a basing pattern here, nice resistance. And you had one little whipsaw through it, but another breakout, and we're coming up on that T2 now, positive divergence. And again, this is one I remain longer term bullish. Just have these three initial swing targets there. So again, it's twofold. It's to talk about the stock market, something I've gone in detail lately, that whole negative feedback loop or vicious cycle between inflation, which goes up, and of course that means interest rates, real or perceived, will go up to counter the inflation trade, and rising rates are bearish for the stock market. So it's that whole loop. And so we'll watch this. We'll watch crude oil. I don't have a very strong opinion still on crude oil. We had that 60-minute divergent low recently on the 60-minute chart, really on the futures, but you can see it here as well. And we had a little lift up, pretty decent lift. I mean, if you look at it in percentage terms, off the recent lows, we rallied as much as 9%. But the big lift was in natural gas. And again, I think based on what I'm showing you, wheat, corn, we're seeing the metals rally. I wanted to share that with you too. I'm going to get to the equity markets in just a second. But platinum is looking good again. I mentioned it a couple of weeks back, and there was a nice bounce, and PPLT. Gold, silver, everything's getting pretty oversold. And you can see platinum. This is PPLT, the platinum ETF. Look at these major reaction lows. 1, 2, 3. Sliced through it a few times recently, but most importantly is this previous reaction low. I put a higher weighting on this than these. And you can see over the last several years, or last couple of years there, almost 3 years, we've had quite a few reactions. So we are very oversold. Yes, oversold, I always say, is not a buy signal, but it is a condition that typically follows trend reversals. Let's just look at the last few times platinum hit that. The blue line is the 30 level on the RSI, relative strength indicator. That shows you when a security is overbought or oversold. So here's your track record. I'm making all the circles. Let me do it again. And then you decide, whether you like this one or not. So 1, 2, 3, 4, 5. We can keep going here. 6. I'm just going to circle where they were. You can pull your own chart, do the same thing, and measure the percentage rallies. Each and every one. I didn't miss a single oversold reading. That's where we are. Now, would I buy oversold just because we're oversold? No. Would I buy oversold at support? Yes. So that's a trade idea for you. I think it's actionable. I'd prefer to see, and I do have actually divergence on the 60-minute chart of the futures, not here on the this ETF. But again, I cover these ETFs first because I know most folks are out there trading those. And again, a bounce trade with a stop somewhat below. Don't get in love with it. It is certainly in a downtrend, but that's what I do. I share a lot of counter trend trades. I know a lot of folks pass on them. They don't, whatever. It's not their style. People are, prone to recency bias, meaning if something's going up, they believe it will continue to go up simply because it's going up. Apple's a great example of that. But anyways, that's it. Take it, don't take it. Take a shot at it. If you're a swing or trend trader, you got to give it a little room, ideally on a solid daily close below that support zone, which runs down to about $84. This is my 60-minute chart of PL Platinum futures. And we had a trade idea back here off this divergent low breakout there. We hit the first, little shy of the second target, But this is a whole new setup now. We went on to make a marginal new but even bigger divergent low here on the 60-minute. That's what I'm showing you there. And then I had this little downtrend line which just popped, broke out, and we're back testing or close to back testing it now. So again, relatively tight stops in case the breakout fails, in case the back test fails, allow for a little more back testing. Maybe it wants to punch out one marginal new low. If it does anytime soon, if it does this and jogs up, you're going to have the divergence will get pretty steep right here, and you'll have some nice divergence there. So again, for me, give it a little room and just a way to diversify and play an oversold bounce. Nothing else, at least an oversold bounce. If you get in, it starts to run, just periodically raise your stops. Max target, well, let me give you one more minimum target here. If you're looking for upside targets, right around there, you have this reaction low to about 965 right there, and another one there. That'd be a minimum target that would give you, if hit, a gain of about 4%. And current max bounce target, let's just say here at about 998, that'd be about a 7.5% or so pop. Treasuries, I threw out about a week ago, I think it was, ZN, the 10-year Treasury bond. As a trade idea, you had a downtrend line right here, and it was to be on a buy signal and break out above. It's flirting with it. Broke out, but not impulsively. It's back tested. We're above the trend line, number one, so that still puts it a buy right now. But you really want to see it take this level out. See that little? You have 1, 2, 3, 4, several reactions right here. This little box. So if it can pop that, let me give you the number right now. That's going to be about 113, 178. That should carry us up to any or all of these potential targets. If you do not trade futures, you can use IEF. That's the 10-year Treasury bond. I gave you this also last week. There's your breakout back test, and so far it's still an active trade. It's broke out, that triggered a long entry. So there's a comparable level, 97.36. Pop that, should be a quick ride up to T1 at least. And you have these potential targets. Maybe just trail your stops and let it run. This also goes into play with what I expected on the market. This is that update on the BYND short trade. I'm sorry, long trade I gave you on. This was Friday the 16th, so Friday before last. And I gave an update, but said clearly right there, and zooming down to the intraday time frame, we hit the minimum target on the 60 first resistance level, and I basically said whether or not BYND continues to rally up to any or all of the additional targets may depend how much longer the stock market holds up, although I suspect next week will be a big down week for the major indices. So best to raise stops and protect gains. So it's both an update on BYND, which let me give you that, but then more so what happened to the index. That's the thing. This was a junk stock, crappy fundamentals, but that's what was popping in the last couple of weeks as markets were getting very frothy, and I can see, not just on TV, but on the website as well, the comment section, everybody getting bullish and just resigning yourself that the only strategy was to buy the dip and get on board, and the whole FOMO trade, Apple won't stop going up, don't fight it. And so anyways, the market went down. We had the biggest, and so BYND did as well. So whether you're still in it, it may still hit those targets. It's well above entry. It's still profitable. But remember, that was Friday the 26th. That was right there. So we've had, since then, this is the biggest drop in the market, especially the Qs. And it's not much, but it's the biggest drop we've had since probably back here somewhere. And it's still not near the move I think we're going to get. So anyways, take it for what it's worth. In other words, crap stocks with shitty fundamentals will probably... that whole game of musical chairs, I refer to it as, when you get a very extended trend and then everybody gets bullish and all the Reddit traders and Robinhood folks start, slipping away from their day job to start buying that stuff. That's usually when the top is near, and that's what we saw lately. So anyway, we're only halfway down to my initial, again, minimum swing target. But then, as I've been stating, if and when this trend line goes, that would trigger a more powerful sell signal. And if and when that target is hit, and again, I think ideally, it doesn't have to happen, but ideally this week, if we can go on and hit, especially if we can close the week anywhere down around or below that swing target on QQQ, the uptrend line on the 60-minute chart. Remember, that's going to keep some of my long-term indicators on sell signals that have been on sell signals since early on in the what I still consider a bear market that's ongoing. But if we do this by the end of the week, and close, well above there, pretty much, it's not a solid level or an all or none, but it's incremental. The farther we close up this week above those highs, the more solid it will, if for lack of a better term, the more solidly it will trigger, those some of those monthly indicators that I have from flip them over from bearish to bullish. But as of now, that's not what I think will happen, and so I think we'll do this. So I still think the RR is very good. We've been short the Qs since pretty much right off the highs. I think the initial short entry was right here. It's certainly not falling hard yet, but this is what I want to show you. Here's the 15-minute chart. This is what we originally shorted it on with this current trade, having these, no, that was previous right here, but we shorted this wedge break. I think that was right there. But when you look at it this way, from a 15-minute chart perspective, you can see a nice recent trading range. And this level was highlighted quite a bit, 360.43 on this 15-minute chart. Big volume up price histogram bars and a thin zone below there. I don't know if you can see those bars. They end right here up to this point. Then you have a bunch of big bars here. So this is, to me, big support here. And it was before, and we hit it. And I mentioned that was from here and here, you have positive divergence. You could have gained the bounce. Bounce went right back into resistance. That bounce target zone I gave you. It's playing out so far almost perfectly. And now we need to break that 360.43. And if so, I think it'll be a very swift move down to 357.69. I put good odds on it happening, so that's going to be, it's not much, but a 1% drop, and it's just going to continue to break the momentum. And, while I get it completely that those bullish are saying, well, that's healthy, Randy, that's a healthy pullback. We need it. We're overbought. But this is a bull trend, so we're going to get that correction. I'm going to buy that dip. But what's going to happen is a lot of the long-term trend indicators will roll over, or intermediate term, like on the 60-minute. I'm sorry, we're on a daily chart. PPO histogram is flipped down to red, made a bearish crossover recently. That measures right here, or shows you when the PPO crosses. And although this one resulted in, it had a correction. The Qs they corrected in time. But throughout the bear market, a lot of times you get those PPO crossovers and your correction was in price. Right here, correction was in price. And these are whipsaws when you're in consult those. But this is a big green hill. There was a crossover right there, correction in price. So that's what I think is probably going to happen. We'll see. But for that to happen, and that kind of is my segue now into Apple. I just read the comments today, and recent comments, somebody asked me about Apple and could I give a time frame on it. I can guess, speculate. What I can tell you with certainty is that a break of this, to me, is an objective short entry and a sell signal, not just for Apple, but for the market. Apple is, again, it's really the king. Even with market cap, it's flirted in recent months with Microsoft. But it's consistently been the largest or second largest holding in the NASDAQ, S&P. And it has such a psychological impact on the market as well. And again, this is just a beautiful setup, in my opinion. You can see it on the 60-minute chart, those same dual uptrend lines I have. They really come in around the same level. And it's just, to me, it's a beautiful setup. And I don't care how strong the momentum is. In fact, it plays into, the fact that it has had such a strong trend. It's so overbought that I think it's safe to say quite a few shorts have capitulated recently. So you have excessive bullishness, and that's what leads the way for a pretty swift drop. Maybe not. Take it, don't take it. I shared it as a trade setup just last week. Let me find that board for you. I have it over here somewhere. There it is, board 6. There's my targets. And again, it is and that's a simple single trend line. It is an untriggered trade setup. No breakdown, no sell signal. But if it breaks down and heads down to T1 from where we're at today, that's going to be a drop of 5%, and that should take the Qs down to that initial target. So There it is all. You put all the pieces of the puzzle together, and so if things happen, and I think it looks imminent, like this week. And again, ideally for the long-term bearish case, it should happen this week. That's no guarantee. We don't always get what we want, but being positioned short, that's what I want. Come down there, the buyers will step in as they do, get a bounce, and that, remember, that's a roughly 5% drop. Ultimately, take that level out. It's going to lead to more downside, and that 5% drop again should roughly correlate with move down to that trend line, or that on the 15-minute chart, that next support level I have down below it. Where is it? Right here. We've got quite a bit of support. This old T2 level there, that should be that 5% drop. Yeah, right about there. So that was the old T2 from back here, and you can see it on the 60-minute chart as well. So right here, if Apple drops 5%, this is probably where the Qs are going, either to that's 348 target, or quite possibly this 330, excuse me, almost 339. These are the first two levels if and when that trend line goes. And so that's what I think is probably going to happen. We'll probably have that little reaction there, maybe overshoot it, come there, and then the buyers will step in if Apple hits T1. So if you want near-term ranges, right here. I have to say, I know I've gone quite a few vacations, but they've been little, couple days here, a couple days. The longest one was a week in Hawaii, and that one I went dark. I wasn't posting a lot because there was nothing going on much in the market. But I will be leaving town on the 28th. I think that's Thursday, early in the morning, and I'm not flying. I'm going to be driving, so I'll be able to work remotely. I'll have a laptop on me. It's only going to be, we'll be back right after the 4th of July. And again, it'll be a working vacation. I won't be immersed in the computer, but I'll try to get updates out to you at least on a daily or bi-daily basis. But if anything big happens, that's where I'll turn my focus to the market. I mean, that's where, as a trader, I make my money not on a daily basis. It's not consistent gains from the market. It's waiting for the big moves and then being ready to jump on it. And I think, again, I've been saying it, I think the potential for a really big move here in the market, a big down move, which could be very profitable if that happens. But we need to see, like I said, first and foremost, we need to see Apple break that trend line. That's going to be a biggie. And then just go over the other things. Microsoft's starting to crack, but I wasn't in love with that uptrend line I had. Alphabet has cracked. Remember, this is what I wanted to see. I want to see the majority of these fangs. So Apple's just needs to join the pack. Alphabet's cracking here. We're below that very good support zone right there. The bottom of it's about 121. We're below it now. And so anyways, I see potential for some pretty oversized gains here in the quick gains. Again, I think there'll be a crowded rush for the exits. I think everything's lined up. It's been building. So just cover some of the other fangs. Tesla already broke down. I highlighted that recently. That's on a sell signal. So that's the thing. I have Alphabet, check. It's in breakdown. Everything I covered a week or two ago. Tesla, check. Still waiting on NVIDIA. It was so high up. It's got some work to do. It's got to come down below the recent trading range. Don't know why my charts aren't loading. There they go. 375. But it's going to be a big drop to get there. And at minimum, that's a target. Short NVIDIA. We're short the semis via SOXX, and NVIDIA is a top holding there. But that's about another 9% drop from where it is from right now, and so that'll be about a 15% drop from the recent highs. Another trade idea that's still out there, I threw this one out as a setup a while ago, a couple weeks ago, but it's still just that. It is just all it needs is that little tiny nudge. I always use that analogy in my head. I remember when I was a kid, and your friend's sitting on the edge of the pool, and you go give them that little nudge. You don't even have to push them hard. They're going to wiggle, lose their balance, and have to jump in. You know what I mean? Because they're leaning that way. You've pushed them that way. So this seems that slight nudge. We're right on the trend line now, and when it breaks down, as I like to say, the redder the better. You get a big red candle, especially a solid red close. That will be another check mark. So it works like this. My check marks. I have check boxes. Apple, Microsoft, Amazon, Tesla, NVIDIA, Meta. And these are all, and the more checks I have, the higher the probability these breakdowns will stick, and the more solid that sell signal in the market is. As I said, the Qs are only going to go so far without Apple, Microsoft, Nvidia, Alphabet, and all those stocks have a very high correlation. Maybe their business models are similar in some aspects. Some are black and white different. Tesla has really nothing to do with Amazon or Alphabet. However, being the top weighted index is when the rest start to break, money comes out, stops are hit on those, selling begets more selling, and that's just how the indexes live by the indexes, die by the index. When money's flowing into the S&P 500 and QQQ, most of the money, every dollar that goes into that index, at least in the NASDAQ 100, over 50%, over 50 cents of every dollar going into the Qs, people buying QQQ, goes into just those top 6 stocks: Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla. Likewise, people start selling their QQQ in index funds, more than 50 cents out of every withdrawal. So those, the Invesco, who manages QQQ, or same with SPY and these other index ETFs, they have to sell what they have, and they have to sell it proportionally. So that's why you can see it's just swift. Probably swifter. That's the other thing about it. Stocks tend to fall faster than they rise. So that's it, guys. I know I'm saying the same thing I've been saying for weeks and even months now. And take it, don't take it. But like I said, we're on sell signals. We're already short the indexes. We're short the semis, and I'll be shorter, for lack of a better word, if and when we get as these additional sell signals trigger. So they don't trigger, not adding to any shorts. If they don't trigger, I may just cover, take profits on where we're at now, take profits at some of the earlier targets, and we'll see. Semis bouncing today. If you're in a downtrend, if your view, is in line with mine, and you think, the semis are going to hit at least these first and second price targets, then you use a bounce like you had today. Just like dip buyers buy dips when you're a short seller and you're bearish and you're expecting more downside, it's the opposite in reverse. So from Friday's low right here, the semis have bounced in this typical fashion because they're higher beta. They bounced 2.7%. So there's and right into minor resistance. So if you were looking to add to your positions, you want to sell the rips and cover the dips, is what they say when you're short selling. It's the opposite of being long, where you buy the dips and sell the rips into resistance, that is. Okay, let me just wrap up, because I mentioned gold, silver being oversold. Gave a kind of heads up on the correction on them before, and then lately said I didn't have any dog in that race, but I'm liking for at least an oversold bounce. We have positive divergence, maybe even more. Like I said, I still suspect the euro is going to drop more, but I don't have a position in the euro or the dollar. And sometimes supply-demand dynamics, if we get a correction in the stock market, you could get a flight to safety bid in gold, even if the euro is falling and the dollar is going up. But I've learned long ago, if the charts themselves are constructive, I do like to align. I get more aggressive. In other words, I'll be more confident on long trade on gold and silver if I can make a very bullish case for the dollar and a bearish case for the euro. I'm sorry, the other way around. Dollar needs to drop. Dollar falling is bullish for gold and silver, and as is a euro rising. So, however, with that being said, we have these divergent lows. Divergence is not a buy signal. I don't have a great trend line in gold and silver, but just want to say the RR right now, risk reward is, I believe, skewed to the upside. I think if silver can pop back above 21, it probably get a nice little bounce here. And again, we have some pretty good divergence. That bounce could carry just a small bounce, or could carry back up here. That would be a swing target if you're interested in silver. Don't give it a lot of room on the downside. Maybe just below the recent lows, 2.5%, but we can pop up there. That'd be about a 7% rally to about the 22.55 level. And again, just ideas, way to diversify. And if nothing else, maybe you have a position trying to micromanage it. You want to know whether to be long, short, add to those positions. Again, so it's not, to me, a screaming buy or a high degree of confidence trade, but it's one that I think, hopefully you were able to, I was sidestep that drop right there. I threw it out here as a bounce trade, and it did bounce off that divergent low there, went up, hit that level, and now it has an even bigger divergent low, which could send it up there. I'm going to stop the video here. I'm going to take another look at the Euro USD and really study that and see where the dollar looks like the dollar's heading. But I just want to get that out to you. So the trade ideas, the things that I'm looking at for potential bounces here that I like on the long side, again, are Treasury bonds, gold, silver, platinum. I think palladium looks pretty nice too, if I'm not mistaken. I'll have to look at that again. Time for me at least. Pullback in wheat I'm looking at, maybe a short pullback trade there. Take some profits on the longs. Again, if you're an active trader, if you're not, just hold off. What else? And obviously stocks, equities and semis. I'd still think there's more downside on those swing trades in the coming days to weeks. All right, let me wrap it up here and get the video out to you guys. And yeah, if I see anything else, I'll do another update today. This has been Randy Finney with Right Side of the Chart. Have a good one.